Hi there. I'm pretty thirsty. Do you accept Bitcoin?
No.
Getting really thirsty now. Excuse me, do you accept Bitcoin by any chance? Wonderful. Today's episode is about money. Hello, and welcome to The Day Before Tomorrow, the show where we look at how technology is shaking up different industries and what they are doing to deal with it. I'm talking to people who are far smarter than me, and with any luck, you'll find them as fascinating as I do. Today we're looking at the world of finance, which is one of the more established and risk-averse industries. So let's have a look and see how people are investing in the future.
The easiest industries to disrupt digitally were the ones where the products could be digitized. If you think back, we've watched over the last decade the music business, now the TV and film business, and this makes sense that these were disruptible. But in fact, the bigger impact is yet to come. It's when we realize the digital dimension of even very physical products and experiences. Think of banking. People think banking is physical because money's physical, right? But it's not. Most of the money that we transact, we don't ever touch or see. We don't need checks anymore. It's all digital. So big industries like banking, financial services is being absolutely hit hard by startup innovators who are thinking, what could I change in the world of banking without being a bank? And they're doing it. We're seeing people facilitating cash transfers without being a bank and not charging the customer anything.
So what's wrong with traditional banking? Well, where to start? I think there are two big things that I would point out. First, and probably most importantly, is around culture. Most banks think that they are in business to make money. And I believe passionately that great businesses are those that set out to give customers a better product or a better service or a better experience. And profit is a byproduct of doing that well. So I think the culture from the top is the first main issue. And the second issue is around legacy IT and infrastructure. So banks, frankly, have branches that nobody wants to use in all of the wrong physical locations. And customers have to pay for these.
I think technology is affecting banking because of the change in consumer expectations of experience. And this is being learned from other categories such as travel or retail. And the need for simplicity, the need for control, and the need for kind of frictionless experiences is growing.
As things are being disrupted, that opens up massive opportunities for the banks who are quick enough to adapt to the changes. So what are the opportunities for the fast movers?
There are huge opportunities for banks to use data to the advantage of their customers, be that making things simpler for them or making them more transparent or potentially helping them identify opportunities to invest and benefit from better products and services. And I think we can see this already potentially in the development of apps which allow people to have real-time analysis of their spending patterns, of their transactions, which allow them to self-regulate and monitor in a way that previously they haven't been able to and adjust their financial behaviour.
We know everything there is to know about you. How many kids you got, where you were born, everything there is to know, plus how you spend your money. I think there's a massive opportunity to gift something back to customers for their business to help them manage their financial lives.
Technology causing changes to the banking industry is nothing new. It's something we've been seeing more and more of in the last 20 years. Maybe looking at things historically will give us good context for how we should be dealing with things today.
Last 20 years, a lot's happened. Accessibility to cash has probably been the first innovation. So ATMs, been around for a while, but makes a huge difference to the reasons why you would walk into a branch. by putting access to cash and some money movement outside of the branch to where you need it has been a big thing. I think probably the second innovation has been the use of the telephone. So the idea that you could call up and resolve some banking issues over the telephone in a really nice way. And then probably the third major innovation is been digital, and probably first to that has been online. And then very recently, mobile in the scheme of things. So mobile has been, I think, surprising to everybody how fast the pace of adoption has occurred.
Banking isn't exactly the world's favourite industry right now. Things like the Occupy movement show the public's distrust in the finance sector as a whole. Banking has some serious work to do if it wants to regain people's faith.
I think banks have very little trust at the moment because they're all perceived as being equally bad, and therefore it hasn't caused any dynamic shifts in the market because, well, my bank's pretty terrible and so are all other banks.
I think the way to build trust is always through behaviour rather than communication. And where historically banks have focused on big, expensive advertising campaigns which have promised an experience, I think user experience and actually investing in what you do is going to become a huge competitive battleground for the banks. And this is why the focus on both digital and physical experience in branch will become hugely important as what they do rather than what they say becomes the key court of consumer opinion.
The best companies for coming up with fresh innovations are small and nimble ones. So how do large and traditional institutions like banks approach innovation?
I think there aren't that many big innovations coming from within banking currently. I think actually a lot of the big innovations are coming as a result of consumer trends from outside the sector. So, for example, the rise of alternative currencies such as Bitcoin, which are a huge threat to the control and stability of traditional money and its relationship with banks. And banks are having to adapt to this.
If you're a bank, say you're Bank of America, and you're seeing someone like Square come up with a small plastic device that you can plug into your mobile phone and suddenly you can accept credit cards. Well, you're Bank of America, you want to enable merchants, you don't want this startup to do it. Well, to Bank of America's credit, they copied it. They actually made their own little plastic dongle that sticks in your iPhone or your Android phone and allows you to take credit cards through Bank of America rather than through Square. So sometimes, even though it doesn't sound particularly courageous, the best solution in many cases is for a large company to just copy these smaller companies as quickly as possible. It doesn't sound particularly strategic, but it turns out to be a great motivator for the company. Because if Bank of America thought to itself, we need to change the way merchants accept credit cards, they would have spent 3 years on that project and millions of dollars. But when they already had a competitor they were watching and said, we need to do what they're doing, it motivated them to move quickly and at very low cost. That's operating like a digital disruptor.
I think the market that we look at the most is the Australian market. They have a lot of the same characteristics that we have, in that the banks have gotten together in Australia and have agreed a faster payment mechanism like we have. They are maybe a year or two ahead as a market in terms of things like PayM, things like trying out NFC payments. So we tend to look to the southeast of the globe, I guess, for innovation, if you will.
Problem with innovation is when anybody introduces something new, they'll have a point of differentiation for a very small period of time until somebody produces the next better version of it. So innovation without adoption is going to fail. What's far more important, I think, to banks and to businesses in general is differentiation. How do you create a sustainably differentiated business? And technology has a role to play in that, but a far more important role in that is culture. So within Atom, we're trying to create a culture which is about embracing innovation. It's about accepting the fact that we don't have a monopoly on good ideas, which is why we've built an innovation scanning unit whose role it is to look around the world at all industries, not just banking, and say, what can we beg, borrow, or steal from other industries, other geographies, that will make us a better bank.
Everyone uses a bank for the same reason, and that's to look after their money. So if you're a bank that's offering banking services, how do you differentiate yourself?
When I had the idea for Metrobank, which was back in 2007, it came out of a consumer insight that said what customers wanted from their bank was value. And all of the big banks thought that value meant price. So they tried to appear to offer the best rate on your savings and the lowest rate on your loans. But 9 out of 10 people choose their bank for a reason other than price. What we said was what you want is value, and value is an amalgam of a number of different things. So the whole Metrobank experience is about giving you as a customer better service, better convenience, and perhaps giving up a little bit on price for the ability to bank 7 days a week from 8 in the morning till 8 at night in our stores, 24/7 online or by telephone. And it worked very, very well.
Customer service isn't dead, and customer service will not die. Whether it's branch or internet only, it is about customer service, right? It is about how our experiences and people interact with our customers so that it's simple, easy. Customers are in control. They feel like they get value out of the interactions. The banks that do that the best will be the banks that survive in the future.
Starting a bank once just isn't enough for some people. After the success of Metrobank, Anthony Thompson is starting another bank, and this one has a different point of differentiation.
What makes Atom Bank different is it's based upon a couple of consumer insights. And the most important insight is this incredible change that digitization has made into people's lives. So bank branch usage has fallen off a cliff. Even using telephony as a means of accessing bank accounts is in decline. All of the growth, and it is really explosive growth, is in the use of digital devices in general and mobile in particular. So Atom will be the first mobile-based bank. It will be the first bank that is literally in your pocket or in your briefcase.
Banks want to accelerate the uptake of digital services, and it's good for them from the point of view of reducing costs. It's good for customers. It creates a simpler and easier experience, more efficient. So there are benefits for parties concerned. One downside, which is quite significant, is of course that having only a digital relationship with your bank potentially increases the likelihood of you switching and having less of an emotional connection, less of a relationship, where historically you may have done with the people in your branch or your manager.
One of the things you'll notice about a lot of digital successes is they only do one thing, but they do it really well. And that approach is working for banking too.
There are other people who are coming in and taking very small niche positions in the marketplace, in money transfer, in loans, in unsecured loans. The business market is being shaken up by a number of new entrants.
And from a consumer point of view, we're seeing the rise, for example, of simplicity in the user experience, and traditional banks are finding it very hard to adapt to this. But if you take a company like Wonga with their famous slider for loans, this is a really good example of somebody who's kind of disrupting consumer expectations and creating success as a result of it.
From the very earliest days of the web, there have been fears about the security of online transactions. Things are so much safer now, but that doesn't mean we can forget about it.
Security is always a massive issue for financial institutions and will remain so. And there are already challenges around persuading some people to bank or transact online because of concerns around security. I think that because of the way in which we will be able to use biometric scanners, fingerprints, wet scanners in order to identify people, these issues will be addressed and overcome and potentially lead to a greater uptake of online in terms of banking.
Credit cards are not valid unless signed because technically your signature is your identification, and without the signature on the card they can't use it as identification. It's kind of fascinating actually because in cyberspace your credit card number is one form of your ID. Historically, your ID is used to prove who you are. It's about trust. And so there's sort of an evolution of fidelity from signatures, which are very easy to fake, to thumbprints and retinal information, biometric data, which is very hard to fake, although could lead to some unfortunate criminal activities with digits and whatnot.
One of the recent financial successes has been the area of crowdfunding. It's something that's really come to the media's attention in the last couple of years. And it's something that could only have happened with the aid of the internet, isn't it?
So crowdfunding is one of those words which is everywhere at the moment, and actually it's a very old-fashioned thing. People were crowdfunding civic buildings, churches, football clubs, monuments back in the Victorian days. So the Empire State's building was crowdfunded effectively through penny share subscriptions in newspapers. So it's an old way of raising money which has been modernised and brought up to date using technology, which effectively means you gather a large pool of people who invest small amounts of money in a project or a person or a community group or a venture.
I'm a big fan of crowdfunding. I've invested in a whole bunch of rewards-based crowdfunding projects, and I've got a drawer full of gadgets to prove it, like this watch, and this watch, and a games console, and this funny little box that doesn't even really work. But crowdfunding's about a lot more than just collecting electronic trinkets.
So there are many different types of crowdfunding. Broadly, there are rewards-based crowdfunding, equity-based crowdfunding, and peer-to-peer crowdfunding. So crowdfunder.co.uk is a rewards-based platform. An equity platform might be Crowdcube or Seedrs that some people have heard of. And in the peer-to-peer lending area, you've got people like Zopa and Funding Circle that have been around a while.
Equity crowdfunding is different than rewards-based crowdfunding like Kickstarter because it is allowing people to take a stake in the company. In Kickstarter, you're paying for a reward. So like the Pebble Watch, for example. The Pebble Watch, you're buying the watch itself and getting that product in the mail. For equity crowdfunding, you're buying part of Pebble, like stock. So it's much different.
Well, the risks on the investor side are pretty clear. Some of these companies are startups. Some of these companies haven't proven themselves yet. And there's a risk that you could lose your entire investment. There are other companies, though, that are going to be raising capital where the risks might be mitigated by the fact that the company has some operating history. It's got customers, it's got product that's already being sold. And for those, the risks are the same as they would be in investing in any existing operating company. On the company side, there are different sets of risks. Raising money through a crowdfunding campaign requires you to talk about your company and what it's doing. Maybe you'll have to talk about something that you don't necessarily want the marketplace or the public to know that your company is doing because you want to protect that intellectual property. So there's some intellectual property risk.
This is a young industry. It's growing at an amazing rate, and it's still got a lot of evolving to do.
Crowdfunder.co.uk has been around 2 years. It's a rewards-based crowdfunding platform. It's grown very rapidly. We're doubling the volume of business we do probably every 3 months. The numbers show that over £1 billion was raised in alternative finance last year, and the number from Nesta and some others who've looked into this show that it's growing at 80-90% a year as an industry.
Crowdfunding isn't the only financial innovation that's been getting a lot of attention recently. So have cryptocurrencies, especially the largest of them, Bitcoin. But most people still don't understand them. In short, they're virtual currencies that are unregulated by any government or financial institution. Bitcoin is most commonly likened to gold, in that there's only a finite amount of them that will ever be released. You can get your hands on them by using your computer as a Bitcoin miner, which means that as a Bitcoin is released into circulation, it may be assigned to your computer. And once you've got one, you can save it, you can spend it, you can exchange it just like you would any other currency. And that has got a lot of people pretty excited.
So there's a number of factors that make Bitcoin really interesting. The first is that it's distributed and open source, which means that there's no central body that governs how much Bitcoin there will be in the world and can print more. And so if you have an amount of Bitcoin, you know that it can't have its value eroded by inflation because a central bank prints more money. The second factor that's really interesting is that it's pseudonymous, which means that you work behind a nickname, and so it allows for a degree of privacy for financial transactions. And the third thing that's interesting about Bitcoin is that it's essentially free-ish. So, when you pay for a cup of coffee at Starbucks, your credit card costs the merchant around 3%. But Bitcoin is an electronic currency, which, like cash, is essentially free to use, and so it doesn't have that toll on the system, that transaction cost, that can release a lot of value when it's used that way.
Here at South by Southwest, BitPay have provided a Bitcoin vending machine, and it's pretty simple to use. All you need to do is sign into your Bitcoin wallet, and here's one I prepared earlier. You press start, you hold your QR code up to the screen, and then all you need is some money to insert into the slot. Now we have 31.2 millibitcoins in our account.
Bitcoins have been subject to a lot of fluctuations over the last few years. I mean, they've obviously risen in price greatly since their conception. This is something that has caused a lot of people to invest in it, as this kind of get-rich-quick system. But for it to really work as a day-to-day currency, it has to be very stable. I would love to see, and I really hope for the day when a T-shirt could be 0.1 Bitcoin.
There are some forward-leaning institutions who are trying to understand if Bitcoin presents an opportunity for them. There are many more who just don't like change of any sort and are trying to, figure out, anything that could potentially damage their businesses. They're trying to sort of insulate themselves from, or in some cases, just look the other way.
Because it solves a real customer need, large and small, and we are definitely interested in it, but there are some pretty major issues that we're going to need to either first as a bank and then probably as an industry kind of come to terms with before we can really accept it as a valid form of bartering. Let's put it that way.
Bitcoin seems to have attracted the interest of the big banks. But what's their problem with it? What's stopping them from getting involved?
Will cryptocurrencies succeed? I think they're a brilliant idea, but I think the challenges that they face are largely insurmountable. Because anyone who wants to create a currency which sits outside of government control is not going to have the support of government. And I think we're going to see the Bank of England, the US Fed, Bank of Japan and others will not want a currency that they will not control, and they will introduce legislation, in effect blocks that will prevent it as a currency succeeding.
I find Bitcoin very interesting. The fact that the establishment hates it so much is probably a symptom that it's probably interesting as well to the finance industry. Obviously, anything which goes through massive fluctuations in value, the way Bitcoin does, is slightly speculative at this stage. But the thinking behind it is great, which is that, think of Bitcoin not as even as a currency, but as a way of recording information in many places publicly. That's fascinating to me.
Bitcoin has even managed to attract the interest of the UK government. Recently, George Osborne, the Chancellor for the Exchequer, announced the launch of Innovate Finance, which is an industry body that's been set up to promote the interests of the financial technology sector, or fintech, if you like jargon. They're kicking off with a study into cryptocurrencies. And the reason that the government's doing this is that they know that if they want to keep the UK at the centre of the global financial industry, they need to embrace the innovations that are happening across the board. It's going to be interesting to see how this develops, because the changes we're seeing now are just the beginning.
The future of banking, I think, is fascinating. I think right now the UK is championing financial technology, the fintech scene, because they seem to be quite strong there. I think historically banking has rarely been challenged because of the regulations of the industry, because of the scale of banks. And so there's been very little innovation in our relationship with our bank, our relationship with money. But I think it's beginning to change. The idea of a startup bank seemed almost ridiculous 5 years ago, and now there are a number of startup banks that are operating in a very different way, which I think is a good thing.
There's so much happening in the world of money right now. We've got new currencies starting up, we've got new ways of raising money for business, and our mobiles are rapidly becoming our main experience of our bank. and we're only just getting started.
So good innovation it's just simple. It focuses on one thing you're trying to make better, right? And it's derived, hopefully, from customer insight.
And I think it's those people who can introduce something which is adopted quickly will be the winners, not necessarily the ones with the best technology. And if we look at a couple of the areas of development in finance in general, one is around payment systems. There's now around 30 different payment systems, ranging from things like Pingit to Payem to PayPal to Square and so on and so forth. Now, some of these will do very well. Some of them won't, because they just won't pick up enough usage, enough ubiquity.
If you're a financial services organization and your investment justifications are really about cost cutting and simply improving margin as opposed to improving a customer experience, then I think you're misguided, because your competitors are going to use a little jiu-jitsu and use those technologies to create better, more compelling experiences that will get those customers to go with them.
We're going to continue to see big changes in banking. The question is, in 20 years' time, will there even be such a thing as cash or checks or credit cards? And will there even be bank branches?
There is definitely a trend towards the death of objects in financial services. So we're seeing the demise of checks, and over time, clearly, cards and of credit and bank cards are declining. Cash remains pretty important, and still over 50% of all transactions in the UK, predicted to decline to 45% by 2018. I think coins particularly will be seen as tiresome and difficult to manipulate in our pockets, but the role of cash overall will continue to be important. Where the challenges will come is from the cashless payment mechanisms which are developing around us, probably not necessarily linked to cards, but more likely to be linked to our mobiles.
I don't believe that we'll ever get to a cashless society. I think it doesn't make any sense, because people will always want to buy things that aren't legal, or at least they're a bit illegal. Just because Bitcoin was heavily used on the Silk Road to purchase illegal things doesn't mean that the drive to be private is necessarily illegal, I don't think. But yeah, I think the drive to cashless society is silly. I don't believe it's ever going to work, and nobody wants everything they buy to be tracked, regardless of whether or not it's strictly above board.
Will branches be around in 5, 10 years? There will absolutely be physical spaces where customers will come to interact with the bank. No question. There are some things in life that it is really helpful to sit down and talk to somebody and look at them in the eyes.
So the role of the branch is hugely significant in the future of banking, because it becomes a place for experience, for emotional connection, for a degree of theatre around what money and banking is from the consumer point of view, and how the bank can help the customer achieve their goals.
So if one looks at digital adoption, it's roughly 60% of 21 to 31-year-olds, 40% of 31 to 41-year-olds, and decreases slightly. But of course, every generation is getting older and is getting more digitally literate. But for those who have not adopted it, the sad fact of life is that they're dying out. And in 10, 15 years' time, if I'm lucky enough to have grandkids, they'll be saying, "Daddy, tell me what a branch was."
One of the changes that digital's making across the board is it's putting more power in the hands of the consumer. And no industry needs to do that more than banking, especially when it's lost so much public trust in recent years. And it's the banks that make things simpler, clearer, faster, more honest, and more enjoyable that are the ones that succeed. Like all good digital changes, it'll happen really quickly, and the banks that haven't invested in their future are the ones that will end up paying the price.